Dylan, this has been quite an education for me, and as it goes along, I feel more and more sorry for your position. If I can
rubber band.
if I can pile on to if I can pile on to your metaphor, I would suggest this horse race is being run in New Jersey. I can say that because I'm from New Jersey.
Is it being fixed?
Where they know who the horse is going to win ahead of time. What's the state to do?
Well, I think that from the state's perspective, you have a couple of different things going on. First of all, these are new technologies, new areas, but in terms of what they're called and referred to, the prevalence of cloud computing and what that entails. Washington State, which is where I've been involved, has been looking at this for quite a while, but more because of the software elements of it, looking at the downloaded music. We have a few software companies in Washington State. The perspective that was taken in Washington started in 2007 with a legislatively mandated study. And if you look at that report that was the result of that year-and-a-half study, the committee that put that together was a mixture of legislators, the Department of Revenue, as well as business community, academic members. And the final conclusion for the committee in their recommendation was that they could not decide what their recommendation should be. But what it did do in that report was try to explain the two different sides of every issue. The sourcing issues, the digital goods issues, the software issues, the transferred versus delivered issues. And so states, I mean, that's the interesting thing about states is there are a number of different ways that this can be approached. And I think that there is an acknowledged lack of guidance in some situations and in some states, but I think overall the streamlined sales and use tax agreement has made Washington State is a member of that, and it instigated a lot of this discussion in Washington State. I provided a handout. I don't know if anyone, I should warn you, it's not to scale, and it has the cloud, and it has what Washington State has done in its legislation that was passed in 2009 and then amended in 2010. And the result is that Washington State, and I think Representative Ross Hunter was a leader in this, seeing the need for it, the goal was to create legislation that was technology neutral. And I think that's where states are trying to, and overall, trying to maintain some sort of technology neutral approach so that whether they're doing it with existing law or doing it with new law, they're trying to say, okay, what is actually being done? What's being provided? Is it a service? Is it software? Is it tangible personal property? Is it some mixture of the two? And I think that Kelley's mention of the cloud services agreement, I know Washington State looks very carefully at those to try to understand what is being sold and where it fits within Washington State's tax structure. The other caveat I need to give is that these are my opinions and not the opinion of the state of Washington. But I think that it's important to realize that I think we were one of the leaders in this area in looking at this and recognizing that software was not simply downloaded, it was accessed remotely, and that how it was accessed was changing and would continue to change over time. Also that digital goods, the traditional download of an MP3 was not the only digital good out there. We're talking about data, huge, vast amounts of data that are being accessed, downloaded, are being sourced and being looked at from any number of locations. And so what Washington State did is said, okay, well, we have to either decide if we're going to do a narrow imposition or a broad imposition. And I can tell you legislators like to impose tax once and then provide exemptions and exclusions for the years to come. And so Washington State chose to provide a broad imposition, imposing tax on all of these different things, remote access software, which would cover software as a service, application service providers, but also digital goods. And then it looked at where these things would merge and said, okay, we want to be technology neutral. We want to be able to look forward at this. We want to catch up in that horse race. We want to be able to provide guidance to taxpayers so they know how to operate and function within the state of Washington. And so they created digital automated services, which is really the combination of the data in the digital goods realm and the software in the software realm, and seeing it come together to provide some sort of automated service. I like to think of it as there's lots of services that are provided by people, and the internet and the high-speed access and the capabilities of software are simply getting better and better. And many of the things that we saw people doing are now being fully automated and provided via the internet. And this is the type of stuff that's supposed to be covered by this concept of digital automated services. So that Washington has a broad imposition and then provided a number of exclusions from that definition, as well as provided a number of exemptions where the legislature wanted to provide certain exemptions for businesses, for consumers, and to provide what they thought was a fair playing ground within the state of Washington. And so if you look at the handout, it tries to show where the cloud fits. And that's one thing that I think is important that comes across through everyone's discussion here, is that cloud computing in and of itself, the definitions change. Information as a service, platform as a service, software as a service, application service providers, digital goods, those definitions come and go depending on what's the best marketing ploy to get people to buy your software or your services. And from that, that's why it's really important, I think, as Kelley mentioned again, to look at that cloud services agreement, because that helps define what are you buying and then how does that fit into a state's tax structure. So that's a very broad description of it, but I think that hopefully gives a structure to what states are generally trying to do. But again, states are different and try different approaches to accomplishing this.
Interesting.
Can I ask a question about that?
Yes.
One of the problems I see with the sort of the broad approach is the interplay with the Internet Tax Freedom Act. And to me, the Internet Tax Freedom Act says if you don't tax it offline, you can't tax it online. And I'm going to use the example of tax return preparation services, where if I take my shoebox full of records down to H&R Block and I ask them to make me a tax return, and I come back a week later and they give me a piece of paper, would that be taxable under Washington law?
Under Washington law, no.
Okay. Now, if I go online and instead of giving my shoebox full of data to the H&R Block guy, and the H&R Block guy is going to go back into his office, and he's going to type all that information into a computer program. He's going to make me a return. Mm-hmm. And if instead of having that guy type my information into the computer, I go home and I go up to Tax Act in the cloud, and I type in all my information. I hit a button and a return prints out. Would that be taxable in Washington?
The use of the individual person or the use of the software?
You said that the H&R Block guy would not be taxable. If I go home and use Tax Act, would that be taxable?
Yes.
How do you square that with ITFA?
Tax Act would be the sale of software remotely accessed. And what's the difference between the Tax Act, and sorry to use a specific product, but the tax preparation software that's on the internet being remotely accessed, different from the CD-ROM that you've purchased and installed on your computer or downloaded from the internet. And in those three instances, and I think this is the same debate that has been had with movies, in the sense that, am I streaming the movie? Am I downloading the movie? Am I renting it on a piece of tangible personal property in a disc, or am I buying the disc itself?
Okay, I would say that when I go down to the office supply store and I buy a copy of a computer program, I bought the primary or the object of that transaction is the purchase of the software. When I go to the accountant, we'll take H&R Block out of it, and have the accountant prepare my return, the true object of that transaction is the preparation of the return. Mm-hmm. And when I go up into the cloud to do my tax return, I don't get a copy of a computer program. I get a tax return, and I get the same thing.
That's a great question. And I think Washington addressed this in one of those exclusions from the definition of digital automated service by looking at the primarily human effort involved. There's a specific exclusion for primarily human effort that says if it's primarily human effort, I've said that 3 times now, being performed, then you would say, okay, then it is not a digital automated service. It's excluded from that definition and would not be taxed as a digital product. You then look to the existing structure that in Washington's case, because it's a gross receipts tax, it would be subject to the service and other activities B&O tax. And so the attempt that our legislature did to address that very question of when are you looking at a person who's performing that tax preparation for you versus when are you accessing an automated through software, through data that then can perform that same service or provide that same tax return, that's the way that we're able to draw that line. And I think the other thing that this gets to, and I think this is the direction that perhaps I think Washington looked at very carefully, is where in ITFA with the online versus offline analysis, when does something stop being a digital or tangible equivalent? And drawing that line has been fascinating in my job. But I think that in general, our 2007 study looked at that very carefully and said at some point, the tangible equivalent is lost. If you, for example, let's look at music, again, a fairly simple idea. The original debates were if you buy a CD, if you download an MP3, if you stream the music to your computer. Well, now there are online streaming software applications or services, however you want to define that, that actually say, okay, you picked this one song. Based on that song, we're going to play this second song. Did you like it or not? If you don't like it, then they'll provide you a second one that's not like the second one, more like the first. And suddenly you have an entire DJ service being provided. Well, is that the sale of a song? Is that the tangible equivalent? Or is it the sale of a DJ or a radio station? And that's where I think the technology is advancing so quickly that the debate is really going to be, for at least ITFA purposes, is this a tangible equivalent or a digital equivalent of a tangible offline product?
I just want to say that we had these very same debates at Streamlined, and I think we went for 2 years worth of conference calls trying to split hairs over what was and what was not a digital equivalent. And we came to the conclusion that we just couldn't do it, which is what gave rise to the specified digital products provisions that are currently in the Streamlined Sales and Use Tax Agreement.
Exactly, and I think that's where Washington, again, this started in 2007. Washington was in the process of completing its transition from an origin-based sourcing sales tax state to a destination-based sourcing sales tax state to become fully compliant and a full member of the Streamline Agreement. And in that process, again, the same study was going on, looking at the 2009 legislation. The Streamline Agreement was very instrumental in what needed to be addressed within the law. And I think that Washington State, at least in its law and its imposition, recognized what Streamline looked at. And also in that study, it says, one of the recommendations or the differences of opinion was that it is too difficult to define tangible versus equivalent, tangible equivalent or digital equivalent, and therefore this imposition is the way that Washington State chose to take that.
And you also have a very broad exemption for business.
Yes.
I mean, that it's very, very, very encompassing for those sales. So.
Dylan, can I close the circle just for me? And I promise that I'll let everybody else in here. If you go back to Mark's question about the accountant. So now the accountant goes back into that room, plugs my information into his software, her software, in the cloud. Would they pay a tax in Washington on that activity?
So if the individual, the account, if they've purchased that software rather than create it themselves, that would be software that they've purchased, whether they have it on a central server for all of their tax preparers to access. Yes, that software would be the purchase of software subject to sales tax.
And theoretically pass to the customer.
That technically shouldn't happen.
You haven't met my accountant.